All right, welcome. Welcome to the stream. And if you're tuning in later, this is a NASDAQ backtesting video. We're just gonna load up random days and start to test some different setups. The platform I'm using is Deepcharts. And if you want to learn more about Deepcharts, go to deepcharts.com. All right, and I don't have an affiliate code or anything, so I'm not trying to push anybody to use the platform, but I do enjoy it. It's not perfect. There's some bugs, but based on all of the applications that I've used so far to trade, this is the one I enjoy the most. But there are some bugs, sometimes with order entry stuff, with mismatches on lot size and things like that. So you have to obviously be careful. It's not perfect, but 95 to 98% of the time it works well. They're still developing it. They're very active in fixing things, and as well as adding new features that the community wants. So it's a pretty good platform. Some of the features you can see, if you're a scalper, you can see where a lot of effort has happened and maybe to step in again. It has some pretty cool initial balance overlay indicators and things like that that kind of can show you where different levels are for the day. Big institutional trades, these big bubbles, and there's other things as well. Can show you where big players stepped in, executing large amounts of aggressive orders. And yeah, there's all kinds of cool things. And we won't be going over all of them, but that's the platform that I'm using. Let's open up Excalidraw, and we'll just kind of go through the things that are important, because it's really good to review. Where is the content? The very top? Maybe over to the right. There we go. Okay. So why that happened? Scroll in and drop down. So the strategy that I use, well, it's not really a strategy, it's just concepts that I would say intermediately efficient at. It's a framework that I've developed that works for me. It's basically absorbing what is useful, discarding what is not, making it uniquely your own, kind of like some Bruce Lee shit. But it's IDGAF concepts, okay? And what that means is I don't give a fuck concepts. I got really tired of hearing ICT concepts. I hear every stream you go into, every video that you see on YouTube related to trading, the ICT, inner circle trading concepts comes up, and I'm just tired of hearing it, because it's basically the same thing. He took a bunch of concepts that have been around from the beginning of trading and created his own language and his own setups, and he absorbed what was useful and discarded what was not, and he made it uniquely his own. Well, that's what every trader should do. You should do it for yourself in a way that you understand. So that's what it's based off of. And for me, the most important thing that's bit me in the ass over and over and over and over again, regardless of what strategy I've tried, is poor risk control. And having poor risk control pretty much deletes your edge. And I'm still struggling with this. And I don't know how long it's going to take for me to break out of it, but I know that it's something that's probably my biggest Achilles heel. Sizing up too large, other things like just getting in, fear of missing out, getting into the position before you have good location. So that's the idea. But having good risk control gives you a survival edge, and a survival edge is more important. So I don't give a fuck what your strategy is. The most important thing is having strong risk control. This is my idea, because that's going to give you survival edge. Because if you don't, you're gonna lose all your money. I don't care what your win rate is. I'm not saying that win rate is not important. I don't care what your strategy is, but the more important thing that I care about is learning how to manage risk. So that's the cornerstone of my IDGAF concepts model. Controlling losses matters more than being right, but only if you have an edge. So managing risk isn't going to give you that edge. It's a prerequisite. Edge equals trade outcomes. So strategy creates expectancy. Risk control cannot turn a bad strategy into a good one. So although risk control is super important and gives you a survival edge, it does not give you a positive expectancy on returns. Next thing, position size. Risk, this is part of risk as well. You have small, medium, oversized risk. Risk and impact increase as your size increases. Leverage, especially if you're trading futures like me on a prop firm account where you already have minimal drawdown compared to how much you need to make in a highly leveraged instrument like NASDAQ. Oversizing turns normal trade noise into account damage. Trade within your account limits. It's not a class on position sizing, so these are just concepts that are important, that are the foundation of any strategy that you create in. Max loss. You need to set your risk before the trade starts, not moving it because you see candles heading towards your stop or away from your stop. Obviously, if you move into profit, you can always lock in profits, because that's part of managing risk. You might be giving up some upside, but especially in a prop firm account where you have a limited amount of drawdown each day, and it's not a class on drawdown. If you trade prop firms, I would expect that you should go research how trailing drawdown works as opposed to end of day drawdown. The next thing, process, right? What is your routine? What are you looking for? How do you do that? That's what is the bias? What is the market regime? Is it trending? Is it in balance? Is it breaking out, or is it constantly reverting back through an existing range of value? Trade location, execution, and then after the fact, review and get better. Okay, care about execution, not ego. Follow your plan and respect your stop. And survival, account equity. Loss control keeps you in the game. It protects your capital. Psychology, long enough to use your edge if you go on a downswing, okay? So this ties into I don't give a fuck. Done right, I don't care if this single trade wins, because I have risk control so I can survive some losses. What I care about is my process, how I'm executing, why I'm executing, how I can protect my account through risk control and repetition of this over many trades. So I've done right. I don't give a fuck if this trade wins, because it doesn't matter. Every single trade is not the end unless you don't manage your risk. Done wrong, I don't care about setup quality, right? Risk control, survival, but you still need an edge, right? You still need a strategy. It's not that strategy doesn't matter. It just means that if you don't have risk control, every strategy is probably going to fail, because you're going to run out of money and you can't trade anymore. Again, being reckless. I don't care about the quality. I don't care where I entry. I don't care what my bet sizing is. I don't care if I have to move my stops because I'm losing. Gambling without discipline. I've done it all, man. We all have. You're here watching this, you've done it too. Okay, we all have. It's normal. It's part of the learning process. So in a nutshell, your edge makes you money. Your loss control keeps that money. No survival without risk control. So that is the foundation of my process, or what I'm trying to get better at. Yeah, I'm not a profitable trader. Disclaimer. Most people aren't. It takes time. Okay, so we go to the next thing that's important. And the reason why I'm going through this is because you need to ingrain it into your brain. Whatever your concept is of how you can be profitable or work towards profitability, you need to ingrain it into your brain. So you need to review it, go over it until you're like, oh man, okay, I can just repeat this in my brain. It's memorized. There's a great quote. It's from Einstein. It says, don't memorize anything you can look up. Okay, well that doesn't apply to trading concepts. You have to memorize them because you're acting on the fly, especially if you're trading live and you're not using an algorithm. But this all needs to be burned in and ingrained into your neurology. Okay, so this needs to be complete. Okay, next. What is a chart? What is trading? Well, in the futures, it's 23 hours, 5 days a week, and then a little extra time on Sunday, right? The market's open. Market's open from 6 p.m. Eastern time, futures, till 4 p.m. Eastern time. There's an hour off, then it reopens. Actually, excuse me, till 5 p.m. Eastern time. Then it closes for an hour and it reopens. And then it keeps going until Friday, where it takes Friday evening off, it takes Saturday night off, it takes Sunday day off, and it opens up for a Globex session at 1800 Eastern on Sunday. So there's always a trade. There's always an auction going on. And auction, basically the way we kind of look at how the auction is going, who's winning, bearish, bullish, whatever you want to call it. I try not to use the terms bearish and bullish in my terminology, but when price is moving in a direction, there's usually effort, and that effort is being rewarded, or that effort is successful when there is a result moving in that same direction. Sometimes there's aggressive effort in one direction, and there's passive people just sitting there allowing those aggressives to hit it, and price won't continue to move in the aggressive direction. Right? Sometimes there's an inefficiency in an initiative to move price in a particular direction. But to really understand how the market works, you need to know that usually effort, volume plus aggression, right? Lots of money plus aggression equals a result. Okay, so agreement, price moves with aggression. So the chart's trending up, that's effective. When price fails to move aggression with volume as well, that's disagreement, right? So the effort and result did not move with price. That's an absorption. All the effort is being countered with a passive reloading of limit orders. Over here is market orders. Lots of them. Lots of market orders that are being aggressively executed. All right. So the math shows effort, right? We can look at the math. We can look at all the numbers, the buy and the sell orders, the differences, the delta, the whatever. And then the structure shows the result. We look at the chart. All right. So that's the next layer. Okay. So we can talk about a market map. It's kind of putting all this stuff together in a more holistic picture, right? So these are indicators. These are levels of interest. This is the price action, the actual candles printing, regardless of time frame or style of chart you use. Might be using a delta indicators to show the difference between aggressive and buyers and sellers, or buyer and seller volume. For every aggressive order that's executed, aggressive buy, there's a passive sell order, and vice versa. Passive heat map. We might buy some type of software that allows us to see where resting orders are or where they were in the past. Options levels. You don't know anything about it. I'm learning. They're important because there's more volume in options traded than futures in the stock market combined every day by a large number, 3-1. So a lot of the big players and the market makers in the options, which is about 52% of all the options volume, they're basically playing against everybody else, and they take any position that, well, they're acting as a counterpart to you, and they'll take the opposite position in the futures or the stock market that they're holding to fill your options call or put. Could be where big battle happens because there's, like I said, dealer hedging, large exposure, a lot of pressure. Options to 100x leverage. It's massive. Structural reference, value areas, plus prior impact levels, where events and battles happened in the past. Okay, that's pretty much what that is. It might react there again, might not, never know. So again, back to agreement, disagreement, result. Right, we have the market map, multi-layered edge. We look at lots of things that are important to help give us that strategy edge. We're not just picking a level to pick a level. We're not just saying, oh, aggressive buyers are stepping in, let's go. Oh, price is moving up, it's going to continue to move up. Or there's, it's not just one, right? It's confluence, and confluence gives you confidence. So market map equals a multi-layered edge. This is the market map. That's why I call it market map. And when it's an agreement, we have a better trade location, okay? Think of it that way. Where we have an edge, we have information, price moves with aggression, effective, trend continues, or new balance forms as an example. Did buyers or sellers respond? Okay. No. Possible rejection, reversal, range development. Location identifies opportunity. Effort reveals participation. Result confirms the trade. Well, a lot of times, truth be told, this is a little inaccurate because if you wait for the result, you may miss the move. So this is a model. It's not literal. So what I'm looking for is when I feel like there's an edge and there's this battle going on between buyers and sellers. If I think that edge is large enough that I'm willing to take the risk and I have a good stop location to protect me, that's where I'm getting in. Okay. So back to entry location, a little bit farther. We're almost done here. Then we'll get into the back testing. Okay. And we're going to try to integrate all this while we're doing the back testing. It's not going to be fast. It's going to be really slow. We'll fast forward through the action a little bit, but location equals risk efficiency. Better location reduces risk and improves the win rate math. Good entries don't guarantee a win. They reduce heat, stress, anxiety, tighten invalidation, and improve positive expectancy. We expect that this will work more than it won't. So structure, levels, value edges, the value area high, value area low, VWAPs, prior highs, prior lows, high volume nodes, low volume nodes. There's all kinds of shit, right? Result, response. Was there a rejection? Was there an acceptance somewhere? Location is stronger when the areas align and buyers or sellers actually respond, right? So that's what you're looking at in a level. There was a battle, there was a response, right? And sometimes it just goes back and forth like ping pong, like at value area high, back to the point of control, or the VWAP back down to the prior value area low, and then back and forth, up and down. Which way is it going? I don't know. Have no idea. But if I can see an edge and price is moving with aggression, or it's being rejected, maybe for a mean reversion trade, and I have an edge strategy wise, my position size is appropriate, I've identified my loss, I have my process, I control my losses. It doesn't matter if I lose a single trade. Because over the long haul, I have an edge. And having an edge is the most important thing. So lastly, let's say you backtest or whatever to have a strategy and it wins a certain percentage of the time. Well, if you have a strategy that wins 25% of the time, you are going to take 9 losses in a row. 10 is very likely. Maybe 11 and 12, like at 99%. You could take 10 losses in a row with a 25% win rate. So Just know that. So it doesn't mean that you can't trade a strategy with a 25% win rate. What it means is you need to expect at least 9 to 10 losers in a row before you get one winner. So your risk to reward ratio probably needs to be massive, right? So let's go down here to 55%. You're likely going to take 5 losses, 6 losses. Odds of taking 7 losses, 30%. Odds of taking 10 losses, 3%. Okay, let's go down here to 65. Already, odds of taking 5 losses are only 40%. Odds of taking 6 losses in a row are 16%. Odds of taking 10 losses in a row is 0%. All right? So you can kind of look at this after you evaluate what your strategy win rate is and really figure out why even strong win rates still produce losing streaks. So you are going to lose. Even if your strategy is 90%, you're going to lose probably 3 trades in a row. You're moving your stops and you don't have risk and you're taking big trades, you could still lose money with a large win rate. High streaks are normal. High win rates reduce risk, better edge. Expect losing streaks, control your size and your risk. So that's it. Numbers don't lie. Prepare for downswings, protect your capital, stay in the game, and back to close it all up. I don't give a fuck what your strategy is. Until you understand that risk control is the most important survival edge. Then and only then does your strategy come into play. But position size, max loss, process, and survivability plus edge equals a winning IDGAF concept. Okay? And I'm still working on it. So this is our process, or excuse me, our model. Okay, this is our model. There's a lot of ways to do this, all right? A lot of different strategies can fit in here. But, all right, so let's get to the charts. Let me open up let me do this real quick. I'm gonna open up a chat because I have no idea if anybody's even listening or here. But I'll open up a chat window and see if there's any questions. If anybody's even here. And then we'll continue. It looks like nobody's here, so perfect. The beauty of recordings, everything will be here for you whenever you show up. If you do have any questions and you make it to this point, you may want to provide a comment on what I've presented so far. Not selling anything, not asking for anything, but if the content's valuable, just let it be known. That would help. Feedback is the most important thing. All right, so back to Deepcharts. Crazy. So 30 minutes to overview of IDGAF concepts. All right, so for myself, 1 minute chart. That's what I'm looking at. Okay. And you can zoom out however many days. This is 5 days I have loaded just to make it faster. All right. Because you don't want to load all that price action into memory. That's 5 days of trading. So what is the date? Let's see here. July 8th. That was our last trading day. So what we see in the last 5 days, we just have a range. Isn't super important, but that's our range, right? We're creeping up on the highs. All right, so the current bias is long over the last 5 days. Okay, we can make it 10. I like to do this. So now what is the market doing? Oh, even 10 days. Look at that. Came down. All right. Still, bias is long. 30 days. Okay, different story. 30 days. We're gonna do the trend lines a little bit different. Slightly. From the lows instead of the highs. Okay, I do some dyslexic stuff like that sometimes. Find 2 touch points. We can find 3 touch points. Right? It's all subjective, right? So we have 2 different regimes here. Right, on the 30-day. We are in a range. Is this a pullback? Who knows? We're in a range near the all-time highs. Do we break out and test the high? Or do we revert back down to the middle? And what is the middle? Well, where is the middle? Middle looks like here. Here. That look like the middle? Eyeballing it does. Let's look at a volume profile. And let's make it composite. Okay, this is pretty interesting, right? This is a composite profile for the 30 days. Point of control is way up here. That's where most of the volume has been traded over the last 30 days. Value area low is right here. Turn this into like a blue and put some dashes on there. That's the value area low. And the value area high is essentially get it this way, a little bit easier. All right, so even though we're back testing, this is our current state. Okay, so this isn't even going to apply, but this is the state of the current auction over the last 30 days. So this is a 30-day auction. Right, this is a little off right here. Right. This is also 30-day high. So put a green line here. This is the 30-day low. Put a red line here. Okay, so something that we don't have on here if we can put VWAP on the composite. Show line, show developing VWAP. Let's see, does that even work? Oh, it does. Look at that. So our VWAP, right, if we turn off the developing line, see it. Oh, it's this line. Oh, it's there. Look at that. I don't know where my line went that I drew. Oh, what the fuck just happened? Are you kidding? What just happened? Did it really fucking crash? Oh my god. What a disaster. I've never seen that happen before. That's the first time. So we just lost everything. Just lost everything. Do it over. Fast. See how fast we can do it. And Q. Good practice. 1 minute. Positive profile. 30 days. right? We already have the levels. Value area high, value area low. VWAP, point of control. See this yellow line here? That's the VWAP, among other things. All right, so we'll mark these lines again, just so I can turn off the composite profile. Buggy ass shit. See, that's what I mean by sometimes things just don't work. Okay, it shouldn't be the case, right? That just should never be the case. And that's not the right location, but it should always work. All right, but it's a great platform nonetheless. Okay, so these are low. All right, then we have our VWAP, which we'll keep yellow. And we have our point of control. We'll make purple. And then we can get rid of our composite profile. You see what I'm saying, man? That's some buggy ass shit. Kind of annoying. Levels just disappear. Should never happen. Okay? That should never fucking happen. So it is what it is. Things aren't perfect in the world, nor is any trading strategy. So expect errors. Let's try this again. Are you fucking kidding? So it didn't hold the point of control level. 29, 15. Isn't that crazy? This makes no sense. Why would that level disappear? Why? So there we go. Thing is, you don't need to have multiple time frames, charts. You can, but you can see everything on the 1 minute. You just have to zoom out. So there is our important levels right now. So over the last 30 days, we're in a range. Came all the way down, created a low, make these blue, got the high up here. We got two levels here. We got the high and the value area high. So we made a high, we came back and made a low. This is all-time high over here. And then we came back, retested the all-time high, broke through it. Now we're retracing back into this small little zone right here. where we had a strong push down from sellers. This little area right here. Also have this strong push down from sellers. We tap back into the range. I expect this to continue deeper into this range that I just drew, which I can improve upon. Actually to right there. So that's what I anticipate next week. We came back into this range. The other option is that we just reject and start to go back down. But I'm going to anticipate a larger pullback into the middle here. So we're going to save this shit so we don't lose it again. And we're going to call it eight, 9, 30-day levels. Put it in NQ. So we are now ready for next week. Now what we're going to do is some back testing. And these levels, I'm just going to close this chart out. Why do that? We're going to open up a new chart. It's going to be CME, NQ. Defaults to 5 minute, 1 minute. We're gonna put on this template that I like to use, like the colors. We have some more context, some big trade bubbles. All right, so this is our chart. But what we're gonna do is we're gonna load a different time frame. Or excuse me, a different time period, and we are going to replay tick data. And we'll choose NASDAQ again. And we're gonna select a random date. Go five-day February 2023. Start at 9:30. So we're downloading the data. No data available. What do you mean no data available? again. No data available. Alright, so I've never tried to go that far back. Hey, what's up, man? How you doing, Alpha? Just doing some back testing, brother. Let's download. How far back I want to go. Go January, February 2023. Tick data, that's gonna be a lot of data. 2024. Yeah, let's not do that. Let's just start with this month. 1 second, man. Let me get this set up and then I'll get back to the chat there. Replay tick data. Let's go back. December. $2025. Or how about November? Start right there. That. All right, perfect. So this is 3/11/2025. So November 3rd, 2025. Perfect. I'm good, man. How are you doing? My week, well, it was mixed. I gambled a little bit and it kind of bit me in the ass. That's how it works, right? So back to the drawing board. I sized up, I took some chances, I did some stupid shit. You know how it goes. That's the honest truth. So we're back here trying to get better again. How about you? How was your week, Alpha? The reason is probably because I wasn't streaming, so I wasn't accountable because I didn't put myself out in public. I trade way better when I actually stream. It's kind of weird, like 100 times better. Because when nobody's watching, oh, just props, man. Just props. I'm not gonna do anything until with real money or other than props. Break even, that's better than me, man. Better than me. I mean, I finished off the week good on I'm up about 3K on a 300K challenge. So basically I gotta get to 20K and it's only day 2 on that, but I blew another one. I mean, all I gotta say is, man, I didn't follow my process, right? So that I just gambled. That's all there is to it. Nah, I didn't get payouts. No fucking way. I wish. Wish I got payouts. Trying. All right, so this is a 1 minute chart. We have one indicator on here. It's called big trades. 60 contract threshold. This applies to New York session. for overnight, we need to see 30, and that's for NASDAQ only. So we're going to be trading the New York session, I believe, here, 9:30 a.m. And you can see this is our foundation. We also have 5 days. We're going to make it a 30-day profile so we can kind of get our bias. You're having 50K or 10K since the month on break even. So you mean you've taken 50K or 10K in profits? Damn, brother. It's pretty baller. Badass. All right, so we're gonna add a composite profile here. For 30 days. Obviously this is older market data, but all right, so this is our 30-day composite profile. That's ugly. Coming up on the high here. So the 30-day bias is up. Actually put that on the top. All right, so I'm probably going to come back up and retest that level. Maybe grab some liquidity here at the top. Got the bottom of our short-term range right here. Draw a volume profile for the swing. Actually, that's a little bit, we don't need that. Let's just do from here to here. Be back just a little bit farther. Gonna see what's good. All right, look at this big push up, this gap. So that's the level that we're going to wait on right here. And to the top side, it's going to be the high. So we're going to let it play out until one of those two levels are reached. So we're not doing anything until we reach one of those two levels. Get rid of this, don't need it. Yeah, 10, man, if you made 10, 50K in profit, keep doing what you're doing, brother. All right, so I think we have enough information. We're gonna pop up the 1 minute chart, put it a little bit faster. 40x, and we'll just let it run. Once we get close to this level, we'll pause it and make a decision. Or this level, right? All right, so we're getting close. Okay, what I think though is my threshold for big deep trades is I don't have enough days to load. Let's load. Let's try 10. Yep, that works. Okay, so what's interesting at this level, we got this big gap, right? I guess this is probably about 50% of that gap. So it's likely that we tap into this, which we probably already just did, right? Let's just mark that gap for all intents and purposes. That gap hasn't been tested yet. All right, move this off screen. What's interesting here is, this big trade, that would be where I want to enter. And this is going to be the trade. A lot of selling pressure here though, right? These buyers just got absorbed and just pushed the price down. But this is where buyers stepped in previously to push the price up, right? We had this aggressive buying, failed, came all the way down, came back to it, failed again, same level, ripped through it. So I think we come back down here again and then maybe retest and push back up. That's what we're gonna look for. We're gonna put this on like 8x. So it's like 8 times 1 minute speed. Open up our sim trading panel. And the thing that I forgot to do is, where do we want to take profit? I think on this one, we're gonna trail it up. That's gonna be the plan. We could consolidate down here for quite some time before making a decision, but essentially we're returning to previous value, and I anticipate that we're going to mess around here. So maybe my profit target, the top of this range. So let's try that. Let's see if we're close. But first we need to get filled. No, what the fuck? Of course it has a different expiration because I'm on a different month. I guess we'll just execute on the fly. Make it easy. Stop right here. So we're running this at 8x speed. As soon as it gets close to the target, I'll drop it down to 1x, so I have time to put the stop in. So exciting. Could have been a trade, tap into 50%, just this little short scalp from 102 to 111. But that's not the plan. The plan is to wait till we return to this level. There's far too many times where you think that's where it's gonna flip and reverse, and it just doesn't. Speed it up just a little bit. Okay, pause. So can I do buy stop? Sure can. We're gonna put our TP up here and our stop loss behind here. So 350. Might be a little tight. So I think it's okay. We're gonna go with it. All right, let's see what happens. Thing is, with these prop firms, you have to really manage the drawdown, especially with trailing drawdown days or trailing drawdown accounts. We can speed this up. Okay, now we're gonna lock in profit. Okay, pause. I think there's an opportunity for a second entry right here. So before we enter, I'm just gonna draw. The entry is right here. With our stop can be limit buy. Stop in the same place. Okay, so stopped out, back to break even. Just a little too tight. a lot of aggressive selling. I like a short from right here too. Okay, so I missed that here. That should have been a short right there. So, although we won't take it and expect to take this back down to here. I guess we can mark it into it. Stop behind. Profit right there. All right. I should have put that into break even. But next shot is going to be right here. Stop. Below here. The TP. There. Back here. Tap into this range. Fuck. It's hard as fuck. That was not a good entry. There was no aggressive buyers anywhere in sight here. I mean, technically, fill that gap, continue down. We make the levels higher, like 100. That give us a little bit more clarity. Okay, well, obviously I don't know what I'm doing.